Hi, everybody. This is Zach Walters of Biker Realtors. It is November 3rd of 2022. I'm here with another weekly market update. I got a lot of information to just kind of go through here today. There was some national news with the Federal Reserve meeting and announcing what we kind of expected already, that they were going to continue to increase short-term interest rates, what that might mean to the 30-year fixed rate mortgage rates. And the Realtor Association of the Sioux Empire also came out with October statistics to tell us where our housing supply is and how strong houses are selling. The first thing, of course, with Federal Reserve, they announced on Tuesday that they are going to continue to try to battle inflation from a demand side by increasing short-term interest rates by a 75 basis points. Basis points is just a fancy way of saying that they're going to increase rates by 0.75%. So for every 100 basis points, that's a percentage point, essentially. Now, chief economist at the National Association of Realtors, Lawrence Sioux, had indicated that even though the Fed's raising these interest rates, the mortgage market had already priced out the latest move from the Fed. So that's good, because that means that your 30-year fixed rate is probably not going to continue to spike like we saw over the last years from the time that the Fed had initially started its rate hikes. The Fed also talked about how we're back to pre-pandemic levels of interest rates, and that they're high, but they're not much higher than they were previous to the pandemic in 2020. So that's kind of encouraging. But at the same time, the Federal Reserve from Jerome Powell had indicated that they're going to continue with their trends until they see inflation decrease, essentially. They are far more comfortable with over tightening than not doing enough, in Jerome Powell's words, meaning that if they see that inflation drops and they're over tightening, they will quickly pivot and slash interest rates, which could be really good news for us going into the future. On the local level, from Raise, they had announced the October statistics, and one thing that I've been looking at quite a bit is list to sold prices. Now, for your starter home and medium-sized home market, which would be the price points between $200,000 and $350,000, those homes are still selling well over list price at where the ratio comes out to about 103 and 103.5%, meaning that for every $100,000 that your house is listed for, it's selling for about $103,000 at closing. So those homes in that price point are still going strong above list price. And what is interesting is that homes in that next price point, where you might be looking for an upscale to a larger home, which would be that $400,000 to $600,000 price point range, those homes last month were selling for less than list price at about 98 or 99% of sold to list pricing. And now they're sitting right around 101 or 101.5%. I don't know why that is exactly. My educated guess on this is that there may be more seller concessions that are built into the offer to help make it a little bit easier for buyers with these higher interest rates to either do some kind of seller-based buy down, or to help pay for closing costs to bear some of the brunt of the purchase. So again, I wouldn't tell you to sell your home just because you want to. You really have to make a strategic decision here, and to make sure that you are getting good value for your home. But the encouraging thing in all of this is that because of the deceleration in price growth right now, and maybe a little bit of a stabilization in interest rates, now is a really good time to get a good value on that right fit home, as opposed to the last couple of years where everybody could get money for pretty cheap from banks. And the great thing about mortgages is that when interest rates do drop again, you can always refinance. So even Dave Ramsey is saying that now is a great time to buy as opposed to the last couple of years, and might be the best time to buy in the next 5 years, because once interest rates drop again, your competition will go up again. So if you need to make that change to that larger home that has more square footage, more bedrooms, better storage, and better floor plans, I'm here to help you out. This has been your weekly market update. There's additional data available below in the blog. And if you have any questions about any of this, or if you would like to find out more about my processes to help growing professionals upscale their living space through the right fit method, send me a message. I'll send you the guide, and we'll talk soon. Have a great day.